Wednesday, December 22nd, 2021, Maneco 64, home of alternative economics and contrarian views. So unfortunately, the energy situation in Europe, and that includes the whole of continental Europe and the UK, the whole of Europe. And the reason I say that is because a lot of my UK viewers don't consider the UK Europe. They look at Europe as the continent, but for everyone out there in the rest of the world, the whole of Europe right now is in a massive crisis. And it's not Omicron, even though it might seem like it is. It is not the political social crisis, even though I think that's bubbling up as well all around the world and especially in Europe. But the biggest crisis is the energy crisis. And we've been warning about this on this channel for months. I think we started looking at it in September. We've seen that about 12 energy suppliers in the UK have gone out of business. We've seen politicians, of course, say that everything would be all right, that natural gas prices would drop and things would go back to normal. But it's far from that. And before I look a little deeper into this, I just wanted to show you something that I think shows that our world is going mad, not only economically, politically, socially, but in terms of monetarily, we are on the threshold of entering really unprecedented times, I think. And that's why I think it's more important than ever to have a little bit of gold and silver outside the system, as I always say. Yes, it's been frustrating, the price movement right now, but believe me, you will want to have some, aside from everything else that I think we need to prepare for, not only spiritually, but mentally, and also in terms of community-wise. But this is the story here. I saw this pop up on Reuters yesterday, and it says, and it's under commodities, believe it or not, Merry Christmas. First SMS, so SMS is a text, sells for over 100,000 euros in Paris auction. And this is part of this non-fungible token craze. And I won't go through the story, but just wanted to show you this. If this isn't a symptom of monetary mayhem, madness, and delusion, I don't know what is. So, back to the energy crisis. And it's interesting because Billy and I have been out already this morning, and it's below zero, which is unusual for the UK here in the London area. Yes, we're not sunny Florida, but it's quite temperate here, relatively temperate, considering our latitude. And the reason for that, of course, is that we get the Gulf Stream, because it should be a lot colder here. But it's unusually cold today, even though it's not something that is not normal. But there's frost out there. Billy doesn't mind the cold. He's got a nice fur coat, of course. But anyway, before I go further into some articles, I want to recommend, if you are on Twitter, to follow, and if you're interested in following what's happening in the energy world, follow a guy by the name of Javier Blas, B-L-A-S. He is a chief energy correspondent at Bloomberg News. And whatever we might think about Bloomberg, he does cover this quite thoroughly. And I have to say, he's been on top of this the whole time, the last few months. So This is what he tweeted out late yesterday. He said, "Does anyone remember when senior EU officials said back in October that there was no reason to panic about energy markets? Or when, around the same time, Kwasi Kwarteng, UK Secretary of State for Business, used the 3-month ahead weather forecast to argue the same?" So yeah, politicians, they they must be the most incompetent people in the world, I would say. But unfortunately, they're voted into power. And the other thing I would say about this energy crisis, it's not just about your utility bills being very high. It's going to impact the whole economy. And we're going to get to that in a minute. And we're going to look at Germany and their crazy energy policy. And I would say Germany and not Russia is to blame for this. And not just Germany itself, but a lot of the EU countries. But Germany is a big culprit. So we're going to scroll down here, excuse me, and look at some of the prices that Mr. Blas was looking at. This is a very niche market. I don't have access to some of these prices. You have to have a Bloomberg terminal, and of course he does. He's showing here winter 22 versus summer 23 spread continues to balloon. Well, that means that there's backwardation and people want natural gas really badly. So there you go. Yeah, there's the TTF natural gas spread. I mean, this is not normal, as you can see here. This means that the front month, the closer to delivery, is going through the roof compared to the back months. And we'll go a little further down here. And he says, as you can see, natural gas benchmark price in Europe jumped to an intraday all-time high above the peak set in October. Dutch TTF has risen above 175 euros per megawatt. That's almost $60 per MBTU, more or less 330 per barrel of oil equivalent. UK BNP jumped to 441 pence per term. So it's not getting better. With that, let's quickly look at some articles here and how this policy in Europe and in Germany especially is disrupting everything. So let's go quickly and look at this one in the Telegraph. It's by Ambrose Evans Pritchard. Yeah, he's not a bad economic correspondent. I mean, I don't agree with everything he says, but he's done a thorough job of looking at this here. Says Europe's energy crisis is fast turning into a political and strategic disaster. And I would say economic, political, and social. All the fateful consequences of Angela Merkel's decision to wind down Germany's nuclear fleet after Fukushima in 2011 are before our eyes. So I don't want to drag on too long this video. I've gone through this article. Basically what the Germans are doing, they're closing down all their nuclear power plants, and they just shut down 3. They're going to shut down 3 over this next week. And why can't they wait until after the winter, seeing that natural gas prices, electricity prices, everything is going through the roof? Well, because that's the way politicians are, as he says here. They've voted it through. They've got a new government, and the Greens are in this government, and they don't want to move an inch to help things. He talks about how, as well, the majority of German public don't want this policy. They want to keep nuclear energy, but never be as it may, the politicians have decided to end it. And the problem's also spread to France. Looks like they're like also closing some nuclear power plants. And then he talks about how Europe is so dependent on Russian gas. So you can see there, it's the dark red color. The UK actually is not as dependent, but the prices in Europe affect the prices all around the world. So it's crazy. The other thing he goes on about is that Germany, we know, is a manufacturing powerhouse of the EU. And he thinks that the politicians, of course, are going to opt this winter to favor people, households getting the energy first, not the manufacturing. And what's that going to do to the supply chain? Well, it's going to make it even worse. I think Germany as well is a huge manufacturer of industrial tools. So they manufacture tools, big tools for manufacturing that they actually sell to China and other countries, so they can manufacture things. So it's a huge mess. He talks as well about how capacity and storage is at multi-year lows. They haven't kept any supplies of natural gas. So, and here's the German day-ahead electricity prices per megawatts. I mean, it's crazy. It's never been where it is right now. And these people are still going ahead with their crazy policies. So it says here, day-ahead electricity prices have exploded to 431 euros megawatts in Germany and 443 in France, testing the viability of the steel, aluminium, cement, and chemical sectors. And this is what's serious here. It says, and this is a quote from an energy consultant who used to run the supply security for the French government, a guy by the name of Thierry Bro. This is what he says. We're way past the point where these industries are uneconomic. They will have to start shutting down. So, yes, we could argue a very long time whether this is done by design or is by accident, incompetence. I think it's a little bit of everything, to be honest, but be as it may. And we don't have to argue about that, but it looks like they are collapsing the European, Western Europe economy. And why would the UK be included in that? We left the EU, right? While we're still a big trading partner, we depend a lot on Europe or the EU for our economic viability. And Germany, of course, is the biggest manufacturer in Europe. So when someone quite knowledgeable is saying that these industries are going to start shutting down, I think it's very serious. So you get the gist of what's going on now. And hopefully, by me covering this, helps you understand what's going on. And I don't have a crystal ball. I don't have all the answers for all the problems, but at least I can show you that there are the problems, and maybe you can prepare a little better for what's coming ahead. And it's not going to be pretty, I would say. So the other article, and we'll quickly go through this as well. I'm not going to read the whole thing for you. I'm going to put some links below to them in the description, even though they're paid for. You have to pay for them because it's in the Telegraph and the FT. I recommend a page. It's called archive.ph. If you take those links and you put it in the red box on that archive.ph page, it will run through that, some kind of engine, and then it will pop up for free for you if you want to read it. So yeah, check out archive.ph. But I thought this was really interesting. Ships carrying natural gas head for Europe as prices surge to new high. Vessels initially bound for Asia reroute mid-voyage. As you can see here, I took a screenshot. The FT did a really nice little graphic of the ship leaving the US, going through the Mediterranean, through the Suez Canal, towards Asia, and then turning around near India, coming back to Europe to sell their gas for a higher price. So this policy in Europe is disrupting everything around the world, and Asia maybe will have a problem next year because Europe is hoarding all this gas now, and their prices are higher. So I thought that was very interesting. And we know that Asia is also a manufacturing powerhouse for Western Europe. So you've got Germany and Asia there. And I don't think it will end up well. Of course, politicians are going to deny everything. They're going to put the blame on President Putin and Russia. And what's going on there? Well, I think Putin is just looking from outside and saying, these people are crazy. What are they doing? And it wasn't Putin who decided not to open Nord Stream 2. I think it was the German government who decided not to go ahead yet because they need some kind of permission. So they're delaying again and again. And yeah, crazy. So let's quickly look at where the markets are this morning. It's 8:45 a.m. London time. Spot gold is at 1786.50. It's down a couple of dollars. Range has been 1795 to 1785. Yes, gold is just going sideways, testing loads of key moving averages, and we'll have to see. We just have to be patient, as I said. And I think it's imperative more than ever to have physical gold and silver. That's personally speaking, my opinion. I'm not telling people to go out there and buy gold and silver, of course. That's for them to decide. But I'm holding on. I noticed yesterday my mining stocks did very well. So it looks like the miners might have bottomed. Who knows? Silver yesterday outperformed all day. Today it's down slightly. It's only down 2 cents at 22.50. Range has been 22.58 to 22.43. Stock market rallied back up yesterday after some big drops last week and earlier this week. Right now, though, Dow future is down 70 or 0.2%. NASDAQ is down 0.5% or 75 points. The S&P future is down 13 or 0.25%. FTSE is down 12.7277. To the foreign exchange market, sterling is up slightly at 132.65. The euro is down about 0.1% at 112.70. Dollar is up 0.2% versus the yen at 114.30. Dollar is up slightly versus the yuan at 637.88. Aussie dollar is down 0.2% at 71.40. The dollar is unchanged versus the Canadian dollar, 129.08. And the Kiwi dollar is down 0.1% at 67.57. The commodities now, WTI crude is up about 0.2% at 71.15. High-grade copper is up 0.2%, 435. And U.S. natural gas is at 381, up about 0.75%. And to finish off, quickly look at the bond market. The 10-year yield this morning is at 1.48. It's down just over 1 basis point. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.